Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for Monday, the 5th of March, 2018, about 3:55 p.m. Central Standard Time. Weather situation hasn't really changed, be it the central or the southern plains in the U.S. That is still lifting up the wheat market. We still had issues, as you know, in Europe. In fact, if you were looking, you saw some great pictures over the weekend as they were able to skate on some of the rivers that they haven't done in the waterways in about 6 years. It got so cold there. And I'm talking different parts of Europe, obviously. But it's Poland, it's Russia that you're watching this extreme weather. Then we get, of course, to the area of South America, and we're talking Argentina to be specific. And while there was rain in some parts of Argentina, the areas that needed it the most still aren't getting it. Beans ended up 6 cents higher off of that news. So let's take a look, if we could, at the charts. And as you can see, the soybean chart for the week, we're up another 6 cents so far. It's first trading day of the week. And we've gone straight from 9.47, if you really think about it on a closing basis, on weekly basis, up $1.22 almost. That's quite a rally. And on the daily chart, how do you stop that? I mean, once it was gone, it's gone, and they're hard to catch because the risk is ever expanding, and traders keep selling into this market figuring out they're going to catch a top. It's not the way you trade. And on weather markets, you never know where they're going to end. Nobody's going to ring a bell for you. When we took a look at the daily chart, we had an inside day, so we have a pause in the market. The market was up today. Would that mean a Tuesday reversal? It could. Remember, sometimes Mondays are looked at as traders as a day that you get a flip-flop on a Tuesday. Does it always work? Absolutely not. Just bringing it to light. You had a pause here with an inside trading day. The swing line is measured by these brown lines on the chart, have a pattern. You can see the formations of peaks and valleys. I created this indicator, so I know how it works. And it's higher lows, higher highs. That's the definition of an uptrend. Under the current pattern, you don't want to see 1043 3/4 taken out. If you do, that breaks the pattern. Now, tomorrow, if the market first goes up over today's high and then reverses down, a lot will depend on how the close is, and is it in the top, middle, bottom part of the range if you close lower on the day. I don't even know that you will. If not, then the market's going to lift the the swing line up to that number. So tomorrow's going to be a fairly important day. Moving averages, well, finally the 18-day average is getting near a prior swing line low. Problem is it could develop all the way up here, and that'll take a while to catch up to that move. In the Bollinger Bands, you at first got the move going by staying over the market 5 days. Then you broke back. You just went up on Friday, hit the peak, and you're still, even though higher today, not back up to that level. What to me is the most important part of the chart is the embedded slow stochastic reading. Now, if you don't know what this is, go to our website at www.iraepstein.com. Under the word education's my charting course. You might want to take a good look at getting that for yourself. But this is an embedded reading which occurs when a momentum indicator first hits either overbought or oversold. If it's overbought and then it starts going sideways over that overbought number, it's locking in and changing the profile of the market. That ends when the red line, which is called the K line, gets back under 80, and it'll be the first line of the two lines that make up the indicator that gets under that. In the meal market, when the market broke down today to today's lows, you had lost intraday the embedded reading. Now, that number's 81.26. What's happening on this market now is you have to keep going up to stop this from turning down. Any pause, the way that the math is going, is going to turn that down and call for a bit of a break in the market. Got to go straight up. If you keep going up, you stop that from occurring. In the soybean oil market, you have one of these patterns of a lower low and a higher high. In other words, no trend. And what's the market moving back and forth against almost now every other day or every day, back and forth. That 18-day average of closes, the resistance point is I'm scratching there, I don't know why. The resistance point is the upper Bollinger Band, support the lower band. This is the laggard part of the market. It is not the market you should be chasing to try to get in. It's going to whip around whatever, probably the opposite of what meal does. In the corn market, back up and over the upper Bollinger Band. So you got a day up and over it today. If we go to Friday, let's get right here. Friday, you closed at 385.25 over the upper Bollinger Band. So that's 2 days in a row. The day before, which was Thursday, you closed at 86.25 over the upper Bollinger Band. 3 days in a row. Day before that, right here, 4 days in a row. And the day before that, right on it. So minimum we have is 4 days in a row. You could count 5 maybe, but I'd say when you're on the band, you're on it. So 4 days in a row, that means there's about a 1% chance of a higher close tomorrow. That's how I start looking at these markets. Then I look to see what are the stochastics doing. And the stochastics were overbought. Then today, both numbers got over 20. Let me take this back here. On last Monday, they got over that. I knew something was wrong. I'm going, how do I know the future? Both numbers are over 80, both over 80 on Tuesday, both over 80 on Wednesday. Then the market gets a bit of a reaction, still staying over it, and on Friday. So do you have an embedded reading? You sure do. So until you lose that embedded reading, which both numbers staying up there, pullbacks, even if I'm looking for the market in the corn to have only a 1% chance of staying over that upper Bollinger Band, they're still what? Very much in the buy camp. In the wheat market, you're riding the upper Bollinger Band as you're pushing this market out. And I find it interesting that the market is still looking at this dry weather. Weather markets, they're hard to predict. Sugar market, battleground, 18-day average of closes. Do you see it right through here? The interesting part of the market, if you read Modern Trader magazine, there's a bump and run strategy in it. This is part of it. Their concept, not mine, their concept, the authors, was that you look at the major trend of the market, okay? First of all, I don't know that there's a major to work here. It's been basically a market caught between 15 to 13 cents for a long period of time. One of the concepts is the trend been, in this case, down. The market went down, found no follow-through. If it were to break out to the upside, maybe that's a reversal of trend. I was just reading the article and trying to understand what the author meant. I think I got it, but that doesn't mean I'm right. And that would carry the market again through here. Do I see a trend that could develop? Yeah, I do, because you got a low, and if you don't take out the low of today, you could have higher lows. I do see that if the market gets up here, it's going to be an overbought condition, but that doesn't mean his idea is not there. Could very well be there. But you read the magazine issue, you'll see it yourself. In the coffee market, the previous low was 120.30. Today you got to 119.95, so you've stepped out of any idea of a trend. You've got a higher high and a lower low. That is not a trend. Momentum is pretty flat. The bias is down because you fell back under the 18-day average of closes. A rock and roll market is the cocoa. Look at how it exploded to the upside. And, you know, we were looking to see all the weather in Africa, West Africa, Center Africa, all the regions where cocoa is grown. I can't find anything that was bearish, yet here goes the market in a runaway, and cotton went into a runaway today. This is the danger of trying to be wise and short over one of these key averages, the 18-day. If you take a look at this market, you had, and let's look at this, an outside day down. You still have a reading that is trying to embed. On Friday, you have how many days of embedding? Both numbers are over 80. On Thursday, they were over 80, and on Wednesday. So I now have an embedded reading. I have a market that if in the first, let me say this grammatically correct, if after you set an outside day down, within 2 trading sessions, you take out this high, as a minimum, I look for the upper Bollinger Band, but I also call it a bear trap. So coming in, this is how the market looked. you took out that high, you obviously went through the upper Bollinger Band from 83.66 to 84.77 and closed over that number. But again, trying to pick tops in markets or bottoms makes no sense. Always look to see your indicators. And again, one of the things that I've used over the years that keeps me sleeping at night is I try to trade with the trend of the market, not against it. Being able to do that as somebody with my experience doesn't come easy for you. To me, it's background. Does it mean I'm right? No, I'm like Swiss cheese. I'll be wrong plenty of times, but it's all about managing risk. In cattle, lower highs, lower lows. Trend is down. First resistance now on the way back up off the lower Bollinger Band, the 100-day average. If you clear that, then the 18. You are oversold. What does oversold scream? Either it embeds and let it do that, or oversold corrects by going up or sideways. Not a place to be, maybe. Same in the feeders. And you have a big reversal against the lower Bollinger Band. You've hit it 3 days in a row. But this is a zone where the market's looking for support. Do you know what the resistance area is? You should. It's the combination of the 100-day and the 18-day average. The bears are in control unless the market gets back over 150.12.5, but an oversold condition. And in the hogs, oversold, try and lift up, look for resistance at the 18-day average to break. Let me say this correctly. To create a downtrend, you should not take out 71.95. Then you have to close back under that 18-day average anyways, or stay under it to keep the bias down. In the meantime, there's no trend. You got a higher high, lower low. You're oversold, and that's your resistance point. Let's talk about trading patterns because they're so important. We've put together a list in our futures trading kit of 12 popular trading patterns, and they're chart patterns, actually. I call them trading. Chart's actually the right word. And you get up channels to get broken, down channels, trading ranges, and you see how they narrow in from time to time. A triangle's a real popular one of these. A lot of them tie together with the momentum oscillators that I'm talking to you about here. How do you get this? It's really simple. Call us. You can go to our website to sign up for it. You'll see our carousel of free offers. Go for the Futures Trading Kit. Click up here or underneath us on many websites. It says, click here for Ira's free information. I'm Ira Epstein. You have a good day.